Folks, you better buckle up. In today's video, we are going to go through the top 5 penny stocks for extreme growth through April 2024. Now, each of the lovely stocks on this list are solid buys. However, we are going to go through the why, fair prices to pay, solid strategies, and how to take advantage. And each of the tickers on this list also have real massive growth behind their businesses and or a clear upcoming catalyst, so they aren't baseless hype stocks. And we're going to get to work, but first, the only thing I ask of you in return for all of the work that goes into making a video like this is that you hit that ravishing like button, turn on the notifications, and subscribe if you find value in the content. And as always, never buy a stock just because we talk about it in a video. You must do your own research and come to your own conclusions. If you are the one taking the risk, you got to be the one doing the ultimate frisk. First, let's go ahead and start with market context. So markets have been a bit more slow as of late and tested a downtrend the last week or so, but overall markets are still hot and headed upward. As traders, it is our job to acknowledge trends, and the trend continues to be to the upside. Remember, the trend is your friend until the trend bends, and then that trend is no longer your friend. A trend bend is when you get a 10% dip from highs. Until then, it's our job as traders to not assume a trend will break, but just to strategically enjoy the trend with clear and concrete stop losses. You and I both know that there have been no shortage of people who have been short the S&P 500 since the dot-com bust and gone on CNBC and Bloomberg every week, virtue signaling about their short positions and how we are in a multi-generational bubble. And sure, they do often identify real issues, excess money printing, debt, geopolitical problems, but you have to always remember that you can make money on whatever trend you are given. And just because you have a lot of massive downside risks doesn't mean the trend to the upside won't continue to inflate. A trader only relies on a trend to make money, and right now trends are upward and will be until we get that statistically significant break of 10%. Now, in terms of new predictions, though, analysts from Capital Economics just predicted that, quote, the S&P 500 is set to soar to 6,500 by the end of 2025, implying a 26% increase from its current levels. And the argument they're making is based on a combination of the Fed lowering interest rates and the relatively low level of excess CAPE yield when compared to previous market tops. If you pull up the S&P 500 excess CAPE yield, which is the cyclically adjusted price to earnings ratio, well, we are down here, which is historically lower than the 2020 heights and the 2008 heights and a lot of the other heights throughout history. Now, if you go and you look at the more traditional S&P 500 PE ratios, which aren't cyclically adjusted, you're still not super pricey. I mean, we were at 28.25. That's still a chunk below 2021, 2020 heights, a lot below 2008 heights, and below the dot-com bubble, but certainly it is on the high side when comparing today to pre-easy money policy eras. So what does this mean in effect? Well, it means that if the economy just stays the same as it is today, the government continues printing, and the Fed goes through with its rate cuts, well, you should continue to see ballooning of valuations in the overall uptrend that we are on. Sure, you'll see some big sell-offs and attempted corrections here and there, but overall trend is upward as of right now, and again, as traders, it is our job to assume it will continue to be upward until you get that statistically significant breakdown. Throughout most of history, many people make the mistake of assuming we are heading for a crash at every single down day or every single down couple of weeks, but the truth is that the trend isn't over until it's over, right? And the vast majority of the time, you were wrong if you bet on a trend change before it actually broke down a statistically significant amount. And back to the Capital Economics thesis, they said, quote, expect risky assets, especially equities, to continue to outperform safe ones over the next couple of years as a bubble continues to inflate in the stock market. And when you're talking about some of the more risky assets in the equity space, what are you looking at? You're looking at the penny stocks. You're looking at some of the hottest of the hot stocks in the market today. And that's what leads us to today's main entree, which are the top 5 penny stocks for April 2024. Okay, let's go ahead and start with number 1, OSS, One Stop Systems. One Stop Systems creates cutting-edge computing equipment tailored for AI-powered activities that need to operate in tough conditions like those found in defense, oil fields, mining sites, self-driving cars, and outdoor entertainment setups. They make strong and durable servers, devices that boost computing power, storage units for lots of data, and specialized software for managing and storing important information. These products help in gathering AI data, learning from it, and making smart decisions on a large scale. Essentially, OSS provides the tech backbone that allows AI to work efficiently outside the comfort of normal office settings, helping machines learn and act smartly no matter where they are. Now, reasons it made the list today. Well, 2 weeks ago, they announced they beat on EPS and revenue for Q4 of 2024, which I believe could be part of a broader turnaround in the company's finances and overall trajectory, which could motivate the stock largely and aggressively to the upside. I'd argue that the Q1 report has a strong shot of being very, very impressive with all the demand in the space right now and may just outpace the industry average as a whole. Given the hot AI market we are currently in and the fact that this is a super small cap with a tiny valuation, well, it makes me think this is prone for more aggressive rallies and opportunities down the road. Their stock had a nice uptrend cycle earlier this year and has been discounted pretty largely from its highs at $458, allowing for a pretty nice opportunity for a rebound. So in my view, watch for bottoming and then a next surge cycle. This stock could easily climb well above $5 in the next euphoria cycle, which could just be a few weeks away. Number 2, NNOX, aka NanoX Imaging Limited. So a couple months ago, it was revealed that Nvidia had some investments in a select number of small cap companies, and one of them was this one, NanoX Imaging Limited. So what does this company actually do, and why did the holy Nvidia invest in it? Well, thank you for asking. This company is targeting the medical imaging sector with the aim of increasing the global accessibility and affordability of diagnostic services. A considerable number of people worldwide do not have adequate access to essential diagnostic services, often experiencing long wait times for imaging scans and results, and that's a big stinking problem because early detection is key in a lot of diseases. And to mitigate this, NanoX is working on creating an infrastructure for medical imaging that incorporates its digital MEMS source technology alongside AI-driven solutions and teleradiology services, aiming to provide comprehensive imaging solutions from start to finish. These efforts are intended to facilitate the early detection of chronic diseases and support health initiatives globally. Key products of NanoX include the NanoX.Arc, which is a medical tomographic imaging system, and the NanoX.Cloud, a cloud-based platform offering image reconstruction, SaaS billing, and a marketplace to connect imaging facilities with radiologists. Furthermore, the company is developing AI software for imaging solutions to assist in the identification of medical conditions such as osteoporosis and cardiovascular disease through the analysis of CT scan data. Okay, but what about the results, Charlie? Show me the money. We care about helping people, but we also want to help ourselves, right? Well, the company is still in the early stage and losing money, but the company is seeing pretty damn dramatic improvements on net income, which is up 80% year over year, and net profit margin, which is up 82%. And while it did beat on EPS for Q4, it also missed on revenue. Now, Q1 of 2024 was super hot for AI companies, and it's easy to see this company really blowing people away when reports start coming out for Q1. But bigger picture, this is not a financials play. If you're looking for a financials play, this is just simply not it, and you probably want to get out of the penny stock sector overall if you're looking for a financials play. This, in my view, is an underlying asset play. NNOX's products like NanoX.Arc distinguishes itself by potentially lowering the cost and increasing the accessibility of imaging products and services globally. And this promise of making medical imaging more affordable and accessible addresses a very vastly unmet need, particularly in some very big underserved regions throughout the globe. Back in February, NanoX's AI imaging software, Health FLD AI, received FDA clearance, which is a really big deal, and the average analyst price target on this is $18, which represents some 70% of upside. But I mean, at the same time, it doesn't have much coverage from other analysts throughout the market, which means, quite frankly, there's a lot of people that are overlooking this company, which means that once you start seeing more analysts covering it, there could be some more inflowing into the stock. And so overall, while relatively young, NanoX's innovative business model centered around its technology platform and services ecosystem presents pretty damn significant growth potential. The company's efforts to commercialize its imaging systems and expand its service offerings globally indicate a pretty clear and clever strategy for scaling its operations and achieving financial growth down the road. So I'd argue keep this on your radar. It is easily a $20 plus stock in the next euphoria cycle. Okay, number 3, SoundHound or SoundHound AI. So SoundHound AI is a company that specializes in voice AI and speech recognition technology. It has developed various technologies, including speech recognition, natural language processing, and sound recognition. It's very focused on natural speech recognition, which is something that a lot of AI sound tools just haven't really gotten down. The company's featured products include a voice AI developer platform, SoundHound Chat AI, and a voice-enabled digital assistant, amongst others. The company has found several key applications in several industries, such as automotive, where it became the first music recognition service shipping in cars. The company has evolved significantly over the years, marking milestones with its partnership with major automotive brands, including, again, Hyundai, but also Mercedes-Benz and Honda, to provide voice interaction for their products using its Houndify voice AI platform. By 2016, SoundHound had amassed over 300 million users worldwide. It went public in 2022, listed under the symbol Sound on NASDAQ following a merger agreement. And the company's mission is to make every product and service voice enabled. And right now, in terms of the stock price, I mean, Sound is cooling down pretty aggressively from highs reached in mid-March at $10.54, and it's now been halved, which makes it an ideal time to start paying attention to the stock. Now, context here, we originally called this a buy in this cycle at $3.54, and it ran to $10.54 over the coming weeks before it had this latest dip cycle. cycle, and that's how you can expect this stock to trade. Massive catalyst euphoria-driven rallies, and then big dumpitos, and then recycling back and forth. SoundHound AI is another example of an NVIDIA buy and a company that is very, 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 very valuable inside technology. The value of this company is what they own, the patents they own, and the technology and the partnerships. But again, the financials, I wouldn't say they're super duper exciting. Like most penny stocks on this list, this company is really about what they own and or what they've developed. Now, I do think they're artificially getting beat down right now, which is an opportunity, and they're getting beat down right now because of what I see as a mostly bogus short seller report calling SoundHound nothing but a cheeseburger AI. Now, we know how short sellers play. They go very, very aggressively short a stock, and then they put out a bunch of negative press releases trying to get people to freak out about the stock, and oftentimes after the people are done freaking out, these short sellers can cover their shorts profitably, and then boom, the stock price goes back up like nothing ever happened. So I'd argue Sound should be atop your penny stock watch list right now. Watch it sell off a little bit more, but I believe you're going to see another bull cycle. Number 4, BBAI, Big Bear AI. So BBAI is a killer stock that just keeps coming down from highs, but it has a lot of upside just to get back to where it was during its previous euphoria cycle at $5. BBAI is a company that specializes in AI-powered decision intelligence solutions. The company provides a range of services, including national security, supply chain management, and digital identity and biometric solutions. It is known for its capabilities in data ingestion, data enrichment, data processing, artificial intelligence, machine learning, predictive analytics, and predictive visualization. These services cater to various industries, including national defense and intelligence agencies, border protection, transportation security, manufacturing, distribution and logistics, travel, entertainment, and tourism sectors. BBAI's recent exciting activities include the completion of an acquisition of PRE LLC from Pangiam Ultimate Holdings, and of the 5 analysts covering it, the price target averages at about $4 a share. Now, I know we've talked about BBAI substantially in the past, and it has continued going down, quite frankly, but as it's gone cheaper, it's making more and more of an argument for a dip buy. My thoughts, well, I'd say watch for more bottoming evidence, and then watch for a little bit of an uptake, and then watch the next momentum cycle play out. It's just a matter of time, in my opinion, before you get that next euphoria cycle. Number 5, SoFi. So if there's one stock on this list to buy and hold and just forget about it, it would be the Fi of the SoFi. SoFi's evolution from a company primarily known for student loans to a comprehensive financial services fintech platform positions it as a serious contender today for a dip buy. We've been talking about SoFi for years, and by acquiring the bank charter in 2022, SoFi has significantly diversified its offerings. This strategic positioning enables SoFi to provide a wide array of financial services, from high-yield saving accounts to personal loans, effectively becoming a one-stop financial shop for its users. And I mean, the results are pretty damn wild. Not only have members ballooned from just under 1 million members in Q1 of 2020 to 7.5 million as of the last report, but their adjusted EBITDA is ballooning as well. Products are ballooning, usage across the board is ballooning. And I believe that membership will continue exploding, and that will continue motivating upward these numbers for nearly every segment of their business. There's just so much cross-selling potential here once you get a new member on board. So anyways, SoFi, in my view, is easily a $15 plus stock by the end of the year, and one that you want to keep atop your radar. Anyways, that caps off today's video. Let us know your favorite penny stocks for April 2024. Which one was your favorite on the list? Is there any that you didn't like? Let us know down below. And in conclusion, a quick plug. What broker should you trade these stocks on? Well, thank you very much for asking, and that brings us over to today's partner, Moomoo. Moomoo is a powerful platform that delivers speed, reliability, data, and a vast amount of trading tools and analytics. Whether we are talking about real-time market data, level 2, financial news and analysis, advanced charting tools, smart alerts, and more, well, Moomoo offers a ton of features that are essential for any active trader and or investor. Moomoo's interface is really, really easy to work with as well, and we've recommended them for years and have a great relationship with them. And we've arranged that if you use our affiliate link down below, you'll get up to a 1.5% cash reward match or 7 free fractional shares. Pretty solid deal for trying out an excellent, powerful, and free broker. Anyways, you can check that out with the first link down below. Have a good one, folks, and we'll see you in the next video.